An eviction summons, a notice of foreclosure. These are perhaps two of the most terrifying words that exist in the English vocabulary. The number of evictions in Lakewood Ranch, Florida have skyrocketed at the start of 2026. And we're also going to learn why this situation is only likely to get worse as things continue to deteriorate in Florida. These beautiful apartments we just saw are called the Residence at the Green in Lakewood Ranch. They just had 9 civil process served at the start of 2026. The vast majority of those are going to be evictions. This is an apartment complex where you can literally walk to restaurants and a fresh market. Probably the last place on earth you think people would be falling into eviction at a massive rate, but things here have been deteriorating rapidly economically. Many years ago, to live in these apartment complexes, you had to make 3 times the rent, and that is no longer a requirement because people just simply don't make as much money as they used to here. And long-term residents have had to move out because after living here for a few years, they usually tend to jack up your rent by as much as $500 a month. However, the new people that are moving to Florida are no longer the wealthy and affluent people from years before. The people moving to Florida now are younger and they make a lot less income, and their propensity to end up economically distressed is a lot higher than the people that were here before. Perhaps that is why now you're starting to see in Lakewood Ranch an explosion of people ending up with evictions. What's up, everybody? This is the Oasis at Manatee River in Lakewood Ranch. There were 8 evictions filed out of this apartment complex in the last month. People are underwater on their mortgages and late on their rents, facing evictions. What the crap is going on in Florida? A wave of evictions has hit Lakewood Ranch, Florida in 2026. On today's video, we're going to go over court records to show you how many families are being evicted in some of these quote-unquote luxury apartments in Lakewood Ranch. You may have recently heard that Florida leads the nation in foreclosures right now. We just prepared our taxes for 2025 and we made $20,000 less than the previous year, even though we're working more hours than ever. Not only are people broke, but they're also burnt the crap out. I'm going to be showing you guys real court documents for evictions and foreclosures. The address and the names have been taken out for the privacy of these individuals. We're not here to shame anybody. The purpose of today's video is to show you how many more evictions are taking place in 2026 versus last year, 2025. There is one individual on today's video we're going to talk about. We're not going to mention his name, but he's on social media flexing about the apartment complex where he lives and the lifestyle that he has. On January the 2nd, this individual checked into Lakewood Ranch for the last time, welcoming 2026. But by the 23rd, he was already filed with the clerk as needing to get evicted. He's also seen on social media dancing drunk on a boat, telling his friends to come join him because things are doing great. Without a doubt, the icing on the cake for this eviction is that he's got his occupation listed as the CEO of a finance company. There were 8 evictions filed out of this apartment complex in the last month. Not every eviction filed turns into an eviction. Sometimes it can be sorted out, and not every civil case equals an eviction, but overwhelmingly most of them are. Now, what's interesting is that at this apartment complex, I dove into looking up the names of the people that were getting evicted and trying to find their social media profiles. Now, it would be horrible for myself to make a story of this nature about somebody else and one day have my name and address on the clerk's website for an eviction for me. But I think I've been pretty straightforward about me and my wife's financial situation, that we're literally living paycheck to paycheck in Lakewood Ranch. But the individual living here, hey buddy, hi man. The individual that was living here had a motorcycle. This guy was living at large on social media. He had rented an extra garage apart from his apartment that he called a man cave, where he had motorcycles, electrical bicycle sound systems, neon lights. On social media, this guy was a financial advisor. But at the Manatee County Clerk Court's records, he was getting evicted. One of his family members can be seen in a comment saying, "Hey, are you sure you can afford this? We're concerned over your situation." It doesn't seem like you're making good decisions. And sure enough, those bad decisions led to this individual eventually having to vacate his apartment here in Lakewood Ranch. At around the same time last year, there were 2 civil processes. That's probably normal for an apartment complex. But in 2026, there were 8 civil processes at this apartment complex. Now, these civil processes could have been literally anything, but we actually dove into the county records and discovered that they were evictions. 8 buildings, 8 evictions. Every single one of these buildings mathematically had 1 eviction. That's a ratio of 1 in 60 residents, and that's pretty freaking bad. That's a ratio on par with what we saw during the 2007-2008. But it isn't just people renting apartments that are flexing too hard in Sarasota and Bradenton. People in gated communities have been flexing too hard too. And on today's video, we're going to take a look at people in apartments and houses who are facing evictions and foreclosures, where their luxurious lifestyles couldn't meet their empty wallets. This house right here is currently abandoned on Google Maps as of August 2025, but this house is on an island. It's on Longboat Key. And as you guys know, to live on an island in Florida these days, you practically have to be a millionaire, unless you bought the house a very long time ago. Longboat Key is an island that connects downtown Sarasota to West Bradenton. It's a very exclusive area to live in. So whether you're on Longboat Key or Anna Maria Island or Holmes Beach, these are very exclusive areas. But even here on these islands, you're starting to see foreclosures. Filed on February the 26th, this is a Holmes Beach address. Now, this loan was issued back in 2003. It was under $300,000. The payments under $1,500 a month. Payments that would eventually go up to around $2,000 a month. That's still very manageable for a house directly on an island. But as you guys know, about a year ago, we had a hurricane that absolutely buried all these houses. So now this house has a $2,000 a month mortgage. I couldn't imagine what homeowners insurance would cost for this property. The bank would require that they have homeowners insurance. So now we're probably talking around $3,000 to $4,000 a month. Add property taxes to that equation, and this house that was recently destroyed by a hurricane is probably needing around $5,000 a month just to stay above water. Imagine having to rake up $4,000 to $5,000 a month for a property that was destroyed by a hurricane, and many times the insurance companies aren't even issuing the payments for repairs during the hurricane. So the bank forces you to have homeowners insurance, but just because you have homeowners insurance doesn't mean that the policy is gonna pay out and repair your property. Some people have been waiting over a year now to have the insurance companies come back. So imagine, over the course of a year, you could have to rake out $60,000 for a place that is no longer inhabitable. Trying to sell the property could have been almost impossible if the insurance company has a claim out. So if these people own this property outright, wouldn't have been a problem because they could easily just have sold the property and maybe even break in a profit. The problem is that many times when you're stuck in litigation, you're also stuck not being able to do anything with the property, and that's probably what led to this foreclosure. And that's only my personal opinion. If there's any realtors or people a little bit more educated than me on this topic watching, please feel free to correct me if you think my evaluation is wrong. But I'm just trying to put logic behind why somebody would lose a house directly on an island. I would imagine that if they're in the middle of litigation with the insurance company, there's a really good possibility that the insurance company and the bank wouldn't have let this person sell the house to get out of this nightmare. So again, if you're a realtor watching today's video, get into the comment section and explain how this works. Maybe you can get some exposure on my YouTube channel, and I won't even send you a $500 bill for that. But it isn't just insurance companies that are ruining people's lives in Florida and sending them into foreclosures. There's also HOAs. Now, this is one case that I ran across. It's a very recent case here in Manatee County where somebody is being assessed by the HOA, by the community, and that assessment led to a foreclosure, where it wasn't just one assessment. It was kind of like a series of assessments and what I consider to be absolutely absurdly expensive fines from the community on this property that led to this person also ending up in an assessment foreclosure, something that's very common in Florida. And I've been warning people, do not buy these condos in Florida if you do not have a considerable amount of money. Because what happens is you buy a condo affordably, but then you find out that this condo is assessing the people that live there constantly. We've even seen cases where these assessments are nothing more than somebody stealing that money. And by the way, good luck trying to get your money back or stop somebody in the position of managing an HOA who wants to start getting kickbacks and assessments, because there's literally nothing you can do to stop it. You can get lawyers involved. The laws are going to favor them. So let's say somebody's at the HOA and they decide to start assessing you guys heavily, and there's no idea where this money is going. It's a very legal and complicated process. So your only option is to pay up, and hopefully one day you could fix it. But most likely, even if that person gets fired or even arrested, there's no guarantee that the money that they stole is going to go back to you. These HOAs and condominium associations are an absolute nightmare. Let me show you guys one example that highlights a process like this. And you know what? Shame on these courts for allowing this, because the case we're looking at now, it isn't clear cut. Perhaps the community needed to make repairs, and it was these people's obligation to come up with that money. So there's a provision for this to happen because there are circumstances where it needs to happen. The issue is that some of these HOAs abuse that privilege to literally extort everybody that lives in that community, sometimes even stealing the money or getting massive kickbacks on the contractors that they hire to do those jobs. It's a total can of worms, but what I find shocking about this particular assessment is that they were issued 3 fines on the same day for $1,000 for weeds and lawn care. My question is, how much landscaping work can you do with $3,000? Quite a bit. This foreclosure claims assessments nearly $10,000. When you look at the breakdown, you can see that there were 3 actual assessments, plus late fees, plus interest, plus lawyer fees, and then the craziest part is the fines. $1,000 fine 3 times for issues with overgrown weeds. Actually, I'm seeing around $4,000 in fines and assessments with issues over weeds and mulch, which I almost understood that that's their obligation, not yours. That's why you're paying an HOA to begin with, right? I mean, really, this person had like $3,000 to $4,000 in assessments that they didn't pay, but now they're demanding that it's nearly $10,000, and I can guarantee you that this is probably somebody elderly who's practically going to end up homeless. They probably bought a condo, they couldn't keep up with the cost of insurance rising, and this is why a lot of elderly people that retired in Florida affordably are ending up homeless on the streets. You're not just seeing people who have use problems ending up on the streets. You're seeing people who literally bought a condo in Florida and are now finding these assessments. The HOAs are literally bringing people into ruin. Combine that with insurance companies, and a lot of people who bought these condos in Florida are finding out that it isn't just whatever the mortgage is, it's the HOAs, it's the taxes. Everything keeps increasing, and that's leading to people ending up in foreclosures. And this isn't a worst case scenario. I've seen cases where the assessments get into $50,000, $70,000, and there's no real explanation why the HOA needs that much money to fix things that could easily be done for less. Most likely somebody's pocketing that money, and people, a lot of them are elderly, are ending up homeless because of these rackets. But then, you can also almost not feel sorry for some of these people, because I'm sure there was videos on the internet warning them not to move to Florida, not to buy these type of properties, but they thought they were smart. They thought they were rigging the system by moving into a condo, and now they're finding out that it costs a lot more just with all the other attachments to the property than what the freaking mortgage is. Here's a foreclosure at Artisan Lake. Now, this is a really nice community on the northern end of Manatee County. It's actually gorgeous. It's been featured in one of my Tampa videos because it's kind of closer to Tampa than Bradenton. They allege $450,000 in a foreclosure. But what's interesting about this particular foreclosure is that if you pay close attention on the name of who's being sued, it isn't just the people who own the property, it's also the HOA, the association, and like 3 or 4 other entities. So when you live in a HOA community or one of these golf country clubs, it isn't just you, the person who bought the property, listed on that foreclosure. In the case of Artisan Lakes, it's the community, it's Esplanade, it's an association, and a bunch of other entities. I mean, there are literally 3 to 4 other entities listed on this foreclosure, which only highlights that if you end up buying in one of these HOA communities, you don't really own that property. You kind of co-jointly own that property with these associations, to the matter that if there is a foreclosure, they're listed on the foreclosure paperwork too, because they're kind of partially owning your property. And that's kind of the issue here. This is probably a property that was part of somebody's inheritance. So somebody had an estate, they passed away, a distribution was made, and 5 different people ended up owning this house. But there's probably some other issues in the background we don't know about, where they probably decided that instead of this being distributed, it's actually going to go into foreclosure. If I had to take a guess, it's because they probably bought that property a few years ago when everything was at a peak, and now it's worth less than that. So instead of being like a real distribution to the family, it's more like a burden that now they equally share, in conjunction with like 3 other entities, including associations, communities, and country clubs, and who knows who else has their freaking hand in the jar here. I mean, crap, there's even a Cuban with his hand in the cookie jar here. Listed on the paperwork is a Yoani Sanchez. That's a very Cuban name. So, like, how many ways do they have to break this house? Like 10 different family members, a Cuban, an HOA, an association, a country club, and probably the landscaping guy has a claim to the property too. What a freaking nightmare. Imagine the notion of your grandparents leaving you this estate, but then all of a sudden there's like, oh wait, there's a foreclosure attached to this estate. So good luck figuring this out. And hey, by the way, I left a Cuban in the mix as well, just to make it extra fun. This is a brand new community in Lakewood Ranch, but these big giant houses are not for sale, guys. These new houses are for rent. It's on the corner of Lorraine and Cedar Mill Drive. These houses behind me rent for $2,600 to $2,700 a month. Now, what's interesting is that if you were buying these houses, let's say in the year 2022, some people paid as much as $700,000 for these houses. Now, these houses behind me, these are about 4 2s or 5 3s, somewhere in that range. You can rent these houses for $2,600 to $2,700 a month now. Back in 2022, people were paying between $600,000 to $700,000 for houses this big, with interest rates between 5 to 6%. Now, what's interesting is today in Lakewood Ranch and in Parrish, these houses are so plentiful that many of these places, instead of selling them, are actually renting them. And you can actually rent these places for something like $2,600, $2,700 a month. Now, the mortgages that people have, combined with their property taxes and insurance for a house this big, can easily be approaching $5,000, somewhere between $3,800 to $5,000 a month, which means that many people are actually considering foreclosing on their $600,000 to $700,000 houses that they bought a few years ago, because these houses are now worth $200,000, even $300,000 less than what they paid. Why on earth would you buy a house like this for $400,000 when you can literally rent the same house for $2,600 a month? $600,000 for a house, or even $700,000, and now that property is worth less. Those properties are now worth more than $200,000 less than what they paid for them. And if you were to rent the same house in this market, your rent would be less than half your mortgage. No wonder people in these types of houses, in this size range particularly, are starting to go into foreclosure. Here's a house in Parrish, Florida, just north of Lakewood Ranch. This house, original principal was over $600,000. Right now, it's going for a county auction for foreclosure, and you can find similar houses for just under $200,000 less than what they paid for in 2022. Now, back then when they bought this house, there was an absolute shortage of houses in Florida. Everybody wanted to move here, but now they've actually overbuilt, and there's houses that are empty. There's even commercial real estate that's empty. We went from an absolute demand to an absolute surplus in a matter of 4 years. What drove up those prices was the demand for real estate. What drove it down is the surplus, but now you have the surplus, but you don't have any demand, which means prices have had to adjust considerably in this particular realm of the market. What you're seeing now is that more people are choosing to rent in these luxury type apartments, But even they are struggling because now, because of immigration changes, there's less income in the state of Florida, and that less income has been paired with inflation, meaning that a lot of people are ending up in foreclosures, but others are ending up in evictions. And no, I'm not going to fix the background noises right now. I just got to wrap up this video. I got 1,000 things to do today. If I sit here and make this video perfect, it's never going to get finished. But basically now these large houses in Lakewood Ranch and Parish can be found in the 300s, where people were pushing almost close to the 700s. So now renting, let's say, an apartment like this means that you're going to get to live in a very exclusive community with pools and amenities, but you're also going to be saving over $1,000 a month just in mortgage payments, plus insurance that you don't have to pay, plus maintenance of a property. Basically, a lot more people are choosing to rent these luxury apartments, and it's actually starting to create a little bit of a crunch where now some of the most desirable apartment complexes are completely filled up because so many people are looking to rent versus buy. Take a look at the Hue. They're in Lakewood Ranch, and they had 13 evictions so far in 2026, and they had 32 police incidents so far in 2026, which means that not only are people broke and not able to afford some of these luxury apartments, but they're actually becoming pretty freaking dangerous. This wave of evictions has also been paired with a wave of crime. The more attractive and better apartment complexes are seeing the rents increase and vacancy be very little. Meanwhile, other apartment complexes are seeing a wave of evictions and also crime. Let's hop on over to the Oasis at Westbrook. They have had 9 evictions so far in the last little bit. If you look a little further back, they actually total 13 evictions since the start of the year, roughly. These once quiet apartment complexes in Lakewood Ranch have lately actually become pretty crime-ridden. Lately, a lot of things have changed in Lakewood Ranch. Apartment complexes like this that were once quiet have actually become pretty crime-ridden. And some of these quote-unquote luxury apartments have actually become hubs of criminal activity. And today, if you're living in an apartment like this, you may actually have to worry about crime and safety. One recent trend in Lakewood Ranch is that apartment complexes like this, labeled luxury living, have actually become crime-ridden. There's one apartment complex here in Lakewood Ranch that has had law enforcement had to show up 35 times in the start of 2026. As I told you earlier, I've been diving into exactly who is getting evicted from these apartments. And in the past, it used to be predominantly white Americans. Recently, there's been an onslaught of Hispanics getting evicted. With the recent changes in immigration in the United States, people's temporary statuses are being revoked. And when people's temporary status is being revoked, we're starting to see a lot of Hispanics and Europeans, Ukrainians, Mexicans, Brazilians, and other people from other countries are getting evicted more than ever. And that is because now there's also a lot of students that were on student visas, and they're also getting evicted. So with these new changes in immigration, we're starting to see apartment complexes like this. In 2026, some of these apartment complexes, as much as 85% of people being evicted are now Hispanic. Most of those individuals, Venezuelans, Colombians, and other people who recently had their temporary status revoked. In the past, 15-20% of the people being evicted were Hispanic in Lakewood Ranch. But in 2026, some apartment complexes, about 80 to 85% of the people being evicted are now Hispanics. Behind me, you can see empty lots. These are huge communities that they started building houses into the millions of dollars. And today, everything here is paralyzed. These were supposed to be million-dollar houses, but today they are empty lots. Vito Circle is an apartment complex in Lakewood Ranch. To start off 2025, they had 0 evictions and very few criminal activity. Starting in 2026, they have 7 civil processes. Most of those are going to be evictions, as well as an onslaught of criminal activity. In February alone, the Manatee County Sheriff's Office had to respond to this apartment complex off of Lakewood Ranch Boulevard 22 times for incidents involving fights, people being pepper sprayed, and other violent and noise complaints. Not only are these suburban areas on the outskirts of Bradenton and Sarasota having more evictions, it's an explosion of evictions, but they're also seeing considerably more crime. And I have a theory on this correlation. It's a correlation that I've talked about many times on my YouTube channel. And it starts with the fact that once you remove migrant working communities from your area, a void is left behind. And usually that void is filled in with people from more affordable areas. So what happens here in Florida is that for many years, real estate has been on the come up, and many people wanted to move to Florida, but they couldn't afford it. Now that the people that can afford it are not choosing to move here, and that there's all this vacancy left behind because of immigration raids, that void is being filled in with people from other states. But these were people who usually couldn't afford living in Florida. And you could probably guess where I'm going with this. These are individuals who moved to Florida, can't find jobs, don't have good education, don't have good experience. These are people who are recently now starting or considering moving to Florida because now there's more vacancy. They think because they're able to finally find affordable rents in Florida that moving here is a good idea. But when they land here, they can't find jobs. Very soon they're getting evicted. And really there's no nice way of saying this, but they're much more propense to criminal activity than the communities that they replaced. A perfect example of that is what we've been covering in Fort Myers in a neighborhood called Pine Manor, known as Crime Manor, where the same situation happened. It was a bad inner city neighborhood. Lee County Sheriff's Office utilized SB 1718, that was an immigration law issued by the state of Florida before the current immigration changes. They evicted many of the undocumented people, and now that neighborhood has become even more dangerous and more crime-ridden than it was before because the people that moved into there were kind of like the bottom dwellers of society. So this is already happening in Florida. I've seen it already. I'm helping people that are moving to Florida, and now the demographic is a lot younger, a lot less income, and there are people who are coming from other states thinking that they're going to have a better future in Florida based on the political rhetoric they're hearing from the state's government. Unfortunately for those people, they're not really aware of how difficult life is in Florida, how little jobs pay, how competitive the labor force is, and how little opportunity and how little the state of Florida helps. So we're starting to see now a wave of people from California, Nevada, Ohio, Pennsylvania, younger people that are coming to Florida, where in the past it used to just be older people that had money. So you figure the nightmare that Florida became when people with money came here, imagine how much it's going to be worse now that you're seeing young people moving to Florida into areas that are more affordable, thinking that they're going to have great opportunities here, not really aware that most likely they're going to end up homeless and evicted because they're used to making easy money in other states up north where the economy is more fluent, where jobs pay better, where there's unions that protect workers. These states have programs to help people who are in economical hardships. They offer help. They offer housing assistance. None of that exists in Florida. These people are moving here, young people from all these states, to fill up the immigration void, completely unaware that this is not the states that they're leaving behind. Housing here is more expensive. Jobs are more challenging. And this is starting to become a huge thing in Florida. And that's why the areas that they're moving to quickly unfold into violence. You may have heard some of the crazy, bizarre stories that we've been hearing on the news out of Lakewood Ranch, horrible scenarios that are happening in Lakewood Ranch. A lot of that activity is coming from people that recently moved to the state. Not older people retiring, but younger people with families. I wanted to back up today's video with real life paperwork because a lot of people accuse me of staging things or exaggerating things. I prefer to do my on-the-ground videos, but today's video is a little bit more of a desk video because I really wanted to include those vital analytics. I want you guys to see these apartment complexes that last year had 0 evictions and now have 7. Apartment complexes that now have 10, 12 evictions. Apartment complexes that may have 1 or 2 evictions in the same time period last year. Yes, Lakewood Ranch is facing a massive amount of evictions. The situation with evictions and criminal activity continues to rise. And as the correlation of real estate prices takes place, people who bought at the peak of the real estate market in Florida, trying to get a big giant house in a place like Parrish or in the far outskirts of Lakewood Ranch, a lot of those people are now realizing that the property they bought, they owe probably more than 2 times what it's actually going for right now. Or if they were simply renting, they could lower their overhead by as much as $2,500 a month. Working more hours than I did last year and investing more money into my YouTube channel than last year, we still made less than $20,000 than the previous year. It's been the biggest slump in my economy, despite the fact I'm working harder than ever. That should just go to show that right now in Florida, things are getting more difficult, and these evictions and foreclosures are just the tip of the iceberg into where things are heading in Florida.